We're back with one of my favorite videos today. We're talking about dividends yet again, and I'm going to take you behind the scenes on how I find the most profitable dividend-paying stocks on the planet. Now, I want to talk to you really quick, guys. I want to talk to you. If you find yourself getting in on the hype, right? You're looking at a stock and you're like, oh man, everybody's talking about this. I need to put my money into it right away and hope that it's going to go up maybe 10x and then I'll make a lot of money. But then you find yourself going to sleep and you're in ultimate stress mode. You can't fall asleep. You're wondering, oh my gosh, what if it goes down? Do you think it will go down? And you wake up the next morning and it did go down and you're stressing out. You're like, should I sell and just cut my losses? Oh my gosh, it's time to get out of the hamster wheel. I want to help you live your ultimate sweet life, and I want to help you give yourself a raise, and that is what we're going to talk about today. So all I ask, if you're excited to learn something new today, tap the like button down below. It does help the video, it does help the channel, and I certainly appreciate it. I'm going to be popping up my iPad screen and I want to show you exactly how I go through and analyze a stock before I buy it, especially for dividend paying stocks. A lot of people will look at a stock price and they say, hey, this one's dipping. I need to buy in because the stock's dipping and it just sounds good and maybe it'll go back up. 2 weeks ago, it was worth $100. Right now, it's only going for 50 bucks. I'll put in 50 bucks, it'll go back to 100 bucks and boom, I make 50%. And that's what your focus is on. Stock price, stock price, stock price. That's not what you want to do. We'll say the stock price is basically a car. You go to a dealership and you look at the car, which is the stock price, and you're like, oh, that car looks awesome. The best, most beautiful car you've seen in your entire life. And you gotta have it. You gotta have it because it's on an incredible deal right now and it looks absolutely beautiful. You put the money down and you're so happy you're now the proud owner of this beautiful, sexy new car. But there's one problem. You didn't look under the hood. And because you didn't look under the hood, you didn't realize that half the engine is starting to rust. And sure, you'll be able to drive it off of the lot, but give it a day or two and that engine's gonna fail on you. And now what you have in your driveway is this beautiful, sexy car that doesn't even bloody work because the engine failed, because it was a piece of crap. That's why we have to look under the hood. So I'm going to take you behind the scenes of how I look under a hood on a dividend paying stock to make sure that I'm finding success. Oh, by the way, what about a dividend yield? A lot of people chase dividend yield because they think, okay, 8%, 18% dividend yield, that sounds like a lot of money. I'm going to chase that high percentage. Well, think about it. Back to our car. The dividend yield is basically the wheels. And you're looking at the car looks sexy. That's the stock price. And then you look at the wheels and you're like, oh, those rims look sweet. But the rims, aka the dividend yield, are all fine and dandy, but it still doesn't work with the engine falling apart under the hood. I'm going to pull up my iPad screen, as I always do, because I think you guys deserve to follow along with me. And I'm going to pick a random hot dividend paying stock. I do not have a course to sell you. I am not trying to make money from you. Today, I'm providing absolute free value, including the website right here, seekingalpha.com. Shout out to them. You're going to see I'm not even signed into this dang thing. Look at that. Not even signed in. This is free to use. And I'm going to use this entire thing absolutely free. Now, they do have an option to upgrade if you want to, but that's totally your call. This is not a sponsored video. I just really like this website because they provide you with some incredible value to look under the hood of the car. Let's say you're interested in a stock that pays a dividend that I'm hearing a lot of people talk about, which is ABBV. I'm going to type it up right here in the search bar, and right there it is, AbbVie Incorporated, okay? Now, you can do a couple things right here. Is you can look down on the news and see what it's all about, blah, blah, blah. That's all great. You can look here and say, whoa, that's a pretty high price point, $111.50 a share. I got to figure out how I'm going to pay $111 for one share. Maybe that's something that you got to worry about. I don't know, but I'm not too worried about the share price because again, that's just the car. One thing I would always recommend is to really understand what this is. What kind of stock is ABBV? Now, if you're not aware of what this company is, this is actually a pharmaceutical research company that is focused on the pharmaceutical industry. So obviously, especially with the recent pandemic and stuff like that, potential upside to this particular stock that potentially weathered the storm. So here's how you look under the hood, my friend. What we're going to do first, we have a couple things that we need to look at. The very first thing, number one, under the hood, aka the engine of the car, is to look at their revenue. What we want to see is we want to see that revenue continue to go up over the last 4 to 5 years. So here on seekingalpha.com, I'm going to click on the financials tab. It's going to take me behind the scenes on this particular stock. Right here, right at the top, it lets you know what the revenues are. Now, of course, for the upgrade version, you can go back further in time, which is certainly good research. None of this is financial advice, by the way. Do your own research, consult a financial advisor. I'm just some random dude on YouTube. You got to do your own research. But maybe this could be something you want to look into while you're doing your own research. What I'm looking at for the purpose of today's demonstration is the last couple of years. Here I have December 2016 all the way up here to the most recent 2021. And let's take a look at their revenue. Here I got 25, and then it goes up to 28. And then here in the year, 2018, it goes up to 32. And in 2019, it goes up to 33. So do you see what's happening here, guys? It's going up in value over the last couple of years, 25 all the way up to 45. And I bet they got a little bit of boost with the pandemic. And then TTM, that stands for trailing 12 month, is also looking pretty darn good at 50, which I believe this is represented in millions. So that's $50 million. Not bad, guys, not bad at all. So point number one, is the revenue increasing over time, over the last couple of years? In this case, they get a green check mark. That is absolutely a good thing. Let's see what else is going on. The number two thing that we want to look at is the PE ratio. PE means price to earnings. You actually find that back here over in the summary tab. And what we're going to do is look over here on the right-hand side. I'm going to zoom this in so you can see it. And right here you see it. The PE ratio is sitting at 8.94. That is pretty darn good. You can also see their EPS at 12.48. That stands for earnings per share. So what we're looking at right here is anytime I see a PE ratio below 20, I give it a thumbs up. So for test number 2, ABBV gets another green check mark. Now, the one thing to keep in mind is a great way to find an undervalued versus an overvalued company is to look at the PE ratio. I'm going to take a quick pause and I'm going to pull up the good old fashioned, everybody knows it, Tesla stock. Let's take a look at Tesla and their PE ratio. Look at that, 160.3. The goal is 20 or less if you're looking for something that has runway for future growth opportunity. What this tells me is that Tesla has to continue to over and mass produce in order to, if you buy in right now, continue to see massive growth over the long term. I'm talking 10, 20 years from today. So if you're looking for a nice, solid portfolio that lets you sleep very well at night while you build your future millionaire portfolio, you gotta look for PE ratios 20 or less. Now, let me go back to ABBV. I just want to show you an example of what we'll call an overvalued stock, which is why I showed you Tesla like that. So that looks good. That PE ratio, 8.94, that's under 20. I'm feeling good. Third test, let's go back to the financials tab. And this time what we're going to do is we're going to look at their balance sheet. So in their balance sheet for number 3, we want to see how many outstanding shares they have. So right down here, you're going to scroll down just a little bit in Seeking Alpha, and you're going to look for right here. Your goal is to look, and this can range a lot. So don't all of these are kind of like a pie. They all get put in together with the ingredients to make it a great tasting pie. Don't just blow it apart for one issue. Just keep an eye on it. Do some more research, maybe dig in if one of the pieces of the ingredients don't make sense. This could be one of them. We're about to find out. But your goal is to see their shares outstanding going down a little bit. You don't want them to increase their shares outstanding. The more they do that, the more they deflate the price and the potential growth opportunity. Your goal is to have them get enough money that they can continue to buy shares back. Sometimes companies will issue additional outstanding shares. The reason they do that is they want to increase their capital. Maybe they're going after an acquisition and they need to raise the capital in order to do that. That's perfectly fine. But the goal would be is to see a return on that investment and see that shares outstanding go back down. So let's take a look at this. Here we have 15.92, and then it remained flat for the next year in 2017. And then we had 1478, so that means they decreased it. That's a good thing. 1478 again, and then you can see right here in 2020 it increased to 1.7. Now that could be as a result of a lot of things going on with the weirdness that was 2020. I'm going to give them a free pass on this one and say that this one still is good and this one still does pass the test as a result of seeing some increase. I'm perfectly fine with that. But that would be the overall thing that I'm looking for there. Now, next and final thing I want to look at is cash flow. We're going to go back up here to the top and click on where it says cash flow. It's going to pull up their overall cash flow. You want to get as much free cash flow and you want to see that increase over the last couple years as well. So let's take a look here at their net income as a good example. In 2016, their net income was 5.9, and then it went down a little bit. Then it kind of settled in, and then it went up, and that's pretty good in 2019 to 7.8, and then December to 4.6 because that was a terrible year. So the thing with the net income and the free cash flow is you want to see them continue to grow and have more profit than they do expenses. Of course, just like your own home, you want to be able to have enough money left at the end of the month with your paycheck in order to invest, pay down debt, do cool things, and everything in between. If all of a sudden you come up at the end of the month and you still have bills that you haven't paid yet, you're in trouble. Same thing with a company. You want to make sure that their free cash flow remains positive. That provides a good foundation of a company. Now, with these metrics that I shared with you today, they're just a scratch of the surface of things that you can do. My goal today was just to give you a beginner view of what I look for in my dividends. But what I will recommend also is start using this or start thinking of what your process is going to be. Consult with your financial advisor, try to figure that out, and then look at how do I make sure that under the hood is looking good. But I got one more thing that's even better. We're talking dividends, right? Let's look at their dividend information. And right here at the top, you can see where it says financials and earnings. I'm going to click on the tab that says dividends. Now, there is an upgrade option. I'm going to ignore this upgrade option right here. I'm going to scroll down to the bottom, and this is what I like to see. Their dividend yield is a 4.66%. I like that. I think that sounds great. That means their annual payout is $5.20 per share every year. Their 5-year growth rate at 18.09%. This is the snowball, my friend. Every company wants to continue to increase their dividend growth, their dividend payout. That is a big deal. You want to see companies that continue to increase that growth. That is what we like to see. And look at this, dividend growth over the last 8 years. Now, this was an acquisition merger type of company. They actually have been increasing their dividend over the last 25 years. This is what we call a dividend aristocrat. You can only get on this list if you've increased your dividend over the last 25 years consecutively. Those are the good guys. This is a great looking dividend. Look at that. Now, they do pay quarterly, as you see down here at the bottom, but look at their last quarterly payout, $1.30, and the ex-dividend date is 4/14/2021. So this quarter, they're paying out $1.30 per share. If you go over your little under the hood check and you see something that, wait a minute, I don't see growth over the last couple years. It seems like this company is declining. It doesn't smell right. Something looks off. That's where you want to continue to dig a little bit further and dig a little bit further and understand what's going on with this company. Because even though they might have a beautiful share price, even though they might have an amazing dividend yield, you might be getting that car that's about to let you get stranded on the highway. And I don't want that for you, and you shouldn't want it either. I hope you enjoyed the video. Tap the like. Here's some other videos you might find helpful. And until next time, we'll see you on the next video.